Alright, what's going guys? Here, Jeff here, back again with another video. I'm down with a little bit of a cold, so apologies for my voice. But today, without further ado, I want to be talking about the main focus of today, something that's shaking the market and shaking the confidence of your portfolio. We're going to be talking about Bitcoin. Okay, Bitcoin has been falling rather sharply over the last few weeks, and I think this is one of the biggest story that is moving the market at the moment. At the moment, I think the market is starting to have a little bit of a correction happening. However, for Bitcoin and the asset class for crypto as a whole, there's a lot of commotion happening. So I'm going to be breaking down what's actually happened, why it's falling so much, and if a recovery is even in sight. Okay, so let's talk a little bit more about Bitcoin. Now, first, let's talk about the reasons why Bitcoin saw its big decline. A lot of people saw the price fall and assumed there's this huge event or this huge liquidity event that happened. But it wasn't actually just one single event that actually triggered the whole entire thing. It's actually a combination of multiple pressures hitting at the same time. Now, the first problem that we actually have is that the market is shifting into this risk off mood, right? You can see in your SPY, which is your S&P 500, you can see in your Nasdaq, there's a lot of correction happening in the market, which means that investors are not really on the risk on mood. Now, investors are going to be pulling back from anything that's going to be way too volatile, and people are going to be stashing their money back into safe havens. So you're going to see bonds and gold do relatively well in the last couple of weeks. Now, of course, this is not just your crypto and your tech, right? It's going to be your whole entire AI industry that we have been talking about so much. When the market get nervous, Bitcoin is generally going to be your first asset class that people want to sell because it's really, really volatile with no proper backing of it. Now, number two, we have to talk about the concerns of the potential tech bubble that is happening, especially in AI. I think I've been talking about this for a pretty long time. I've talked about it on my Instagram page. If you're not following me on Instagram, do check out the link down below. I do post stories on the news generally, but do take into consideration that it is my private Instagram. So I do post about my own life as well. Okay, but if you want to get real life updates, down below. Now, the AI bubble that is now currently being spilled over to crypto. Now, when people are talking about bubble economy, right, they start to reduce exposure into your speculative assets. And when crypto sits at the top of this speculative list, generally you kind of know what's going to happen. That is going to be the first fat they trim off of their hot mail. Now, number three, we have to talk about the massive outflows from the Bitcoin ETF. Now, if you are unaware, in the last couple of years, Bitcoin has performed relatively well to the point where crypto is starting to have their own ETFs. So BlackRock has their own Bitcoin trust, which saw significant withdrawals. Now, when people start to redeem their ETF units, it's basically selling off their ETF units for them to get back the cash. What actually happens here is that the fund would have to sell off a real Bitcoin to meet those redemption. Otherwise, they would be margin called in that sense. Now, this creates this mechanical selling cycle because when investors show fear in the market, they sell off the ETF, then the ETF would effectively have to sell off the underlying assets. Price drops even more. More investors that's already invested into these Bitcoin ETF will be like, okay, I'm panicking, I'm doing it. They are selling off as well. And the more it happened, the cycle continues and the ETF keeps on selling more and more ETF units and they have to sell off more and more of their Bitcoin holdings. Now, number four, it's the miner selling has also been increased. Now we have to talk about the halving. Okay, I know that this is going to be a little bit nerdy about it, but in 2024, the last halving that happened, the miner revenue has actually been under pressure. Okay, so when Bitcoin stopped holding the key levels, miner began selling more of their reserve to cover costs to add extra downward pressure. And this effectively will just bring down your Bitcoin overall price due to more selling pressure. Now, number five, we have to talk about liquidity in the crypto market that has been thinning out heading into the end of the year. This is generally what's going to be happening with equities. That's going to be what's happening with volatile assets because people generally want to clean off all these high volatility assets and have lower liquidity because that way they can actually have less volatile portfolio exposure. So your lower liquidity actually exaggerates every single move. So outflows that normally wouldn't be a big deal, hitting much harder than usual, starts to hit where it hurts. And this is why Bitcoin is starting to see this huge pressure. Now, let's talk about what's happening under the hood because it's not just your standard headlines. The underlying mechanics actually tell us a rather clear story, right? The spot volume generally dropped significantly. Okay, so instead of me just telling you about, oh, this is why it happened, that is why it happened, the clear cut line is simple. Okay, it's dropping because there's more sellers than there are buyers. People are going to be sellers in this market. Uh, there's not a lot of people buying in this market, which is why you can see the whole asset class going down as a whole. So, of course, with a lower volume, it also generally would bring forth weaker support levels and price become easier for you to move. Now, funding rates turned negative recently. Then that basically means that short sellers are going to be a lot more active because the sentiment turned bearish across all your derivatives market, and that is going to have some inclusion to a volatile asset class such as Bitcoin. Now, long liquidations are also spiking in the recent days and weeks. So the price falling actually have a lot of possibility with a leverage long position getting liquidated automatically. Now, this is going to be creating forced selling, which pushes the price down even faster. And finally, you have to talk about stable coins because the stable coins inflows actually slowed down significantly in the past 2 weeks. Now, stable coin inflow is a very good proxy for a lot of us to see new money coming into crypto. This is where we see fresh funds. This is not just someone selling Bitcoin and buying Ethereum or someone selling Solana and buying into Bitcoin. We want to see stable coins for us to actually see where volume is. And when inflows into stablecoins slow down, it basically means there's going to be lesser fresh capital coming in to support prices for the whole entire asset class. So, of course, the big question is going to beg, can Bitcoin recover from this whole entire thing? Because right now, as of this exact moment of me filming this video, Bitcoin is sitting at about $85,000. And of course, we have seen Bitcoin at $122,000. Seeing it at $85,000 does not sit right with people who hold onto Bitcoin. And historically, Bitcoin has always reacted sharply during your risk off periods. And generally, you're going to see huge rebounds once your conditions stabilize. So I do think that Bitcoin is going to be extremely sensitive to global liquidity. And the moment when we see liquidity improves, I believe that crypto usually would be the first to recover because people want the volatile asset to make the quickest buck first, especially when conditions starts to stabilize. I think ETF outflows is not going to last forever because the same people who are panic selling are generally going to be the first few people to formal buy in back into the market once we see a little bit of condition stabilizing. So if ETFs flip back into the net inflows instead of outflows, I think that alone can actually be a very, very good and powerful catalyst for a spring up in Bitcoin action. Now, institutional demand is currently still strong in the long term, especially with the Trump administration still in power. They are generally very, very pro Bitcoin, which means that your large funds, your pension plans, corporate will not lose interest in Bitcoin. They are just going to be cutting off, skimming some of that fat off, but they are still going to be looking into possible places to dollar cost average into their Bitcoin. They simply just paused due to this short term uncertainty. and of course of liquidity situations. Now, a macro pivot is going to be the potential catalyst that I see, because any sign of a federal rates cut, quantitative tightening showing it to be completely ending, which is possible because we are looking at QT possibly ending on the 1st of December. Stabilizing inflation could open the doors for a risk on environment again. However, Trump has already stopped the CPI from coming out for last month. And all this is going to be the perfect recipe for crypto to thrive again. All crypto would require is for liquidity to come back. Now, the on-chain data continues to show that the long-term holders are not exactly selling. Those people are the hodlers. Those are the diamond handers. They are going to be keeping it staying strong, right? The weekends are the one that are leaving the asset class, and that's usually a pretty bullish setup for the next phase. Now, I do want to add in a little bit of a geopolitical angle, because markets has been absorbing a mix of political noise, global tensions, and uncertainty around fiscal policy, especially when we're talking about such economic status. Politics generally is going to be playing a huge role. Now, all this is going to be creating caution across risk asset, and when geopolitical uncertainty rises, investors would naturally shift towards safety, which is what I said about bonds. Sorry, about safe investors going into bonds and gold. So yeah, crypto is going to get hit harder than traditional assets for sure, especially during this period of time. So here's the bottom line, okay? Bitcoin, I don't think Bitcoin fell because of one disaster or just one headline from CNBC or anything of that nature. I do think that there's ETF outflows, the miner selling, the low liquidity, the macro fear, liquidations, and just generally just broader risk off sentiment that's happening in the market. And it just so happened that they're all happening at the same damn time. So the same system that pushed Bitcoin down is also the system that could help Bitcoin back to its recovery again. So we never know, right? If liquidity conditions somehow do improve, I do believe that ETFs is going to flip back into their inflows to end all the outflows. And if macro uncertainty starts to cool off a little bit, I think Bitcoin definitely would have a lot more room to bounce back. Anyway, that's all I have for this video. I hope you found this helpful. If you enjoyed this video, please hit like and subscribe to my channel down below. And also, follow me down in the link below on Instagram, as I do post live updates on the market. And if you see any link that you want to use in my description box down below, hit me up with a DM if you do not know what to do, and I'll guide you personally. Anyway, thank you guys so much for watching, and I'll see you guys in the next one. Peace out.